than just business news, we're news for business people.
Hello and welcome to Bloomberg Quint Live, and you're watching Trend Spotting. I'm Navneet Saluja D'Souza.
Good afternoon, Navneet. I'm Agam Akil, and in the next 30 minutes, we dive into the specific trends in the markets to draw out key takeaways and its implications for investors. But first, the headlines. Markets hunt for direction with both benchmark indices trading with marginal moves. Broader markets outperformed, whereas the India VIX advances. And the SEBI bars Pricewaterhouse entities from issuing audit certificates for 2 years for its role in the Satyam scam. And the earnings season starts in earnest with two nifty companies, TCS and IndusInd Bank, slated to report the third quarter earnings today. And Bank of Baroda plans to sell its stake in Nainital Bank as it looks to hive off its non-core assets to bolster its balance sheet.
Okay, let's take a look as to what's happening with the markets. Well, the other day of consolidation when it comes to Nifty, but right now Nifty is just about turned green. So 10,633 is the mark where Nifty is trading. Its off day's low. Sensex just about holding there, 15 points gain. Bank Nifty, that's been under pressure. That's also underperforming the Nifty. Remember, we've been highlighting that for you. But today is also the day for the Bank Nifty weekly options contract to expire, on back of which you could see a bit of volatility to come by. Looking at the options data positioning, it looks like that the expiry can take place in that range of 24,400 to about 25,800. Pardon me, it's 25,400 to about 25,800. So do watch out for that range in today's session. But India VIX, that's been the cause of worry. It is still trading in the green right now. So 14.2 is where India VIX is currently trading. In terms of sectoral indices, once again, Nifty Realty is the one which is outperforming. So Nifty Realty is up almost 2% in today's session. Remember, this is the index which outperformed in 2017, and a start to 2018 also has been pretty good. But what's underperforming today are the likes of Nifty Metals and the Nifty Private Banking Index. No major losses seen there. It's just that those indices are just about trading with mild bit of cuts right now. Remember, Metals has seen good amount of gains, so probably today could be the day for profit booking that one is seeing for this index. Let's also pull up the market breadth and see how the broader markets are doing. Clearly, they've been outperforming the benchmark indices. You look at the Nifty stats right now, clearly in favor of the advances, 2:1, and even the broader markets, the small cap as well as the mid cap index are sitting with substantial gains right now between 0.5% to about 1%. Let's just pull up the contributors chart of Nifty and see which are the stocks which are dragging the index lower today. So it is actually dominated by financials. ICICI Bank, Axis Bank are the one which are trading in the red, and we did see the private banking index also tumbling in today's session. TCS is in focus ahead of its earnings, and Reliance Industries is trading with mild bit of cuts in today's session. But what's doing well? Kotak Mahindra Bank, Infosys comes out with its numbers tomorrow, Sun Pharma as well as India Bulls Housing, that's your top gainer on Nifty. These four stocks are the one which are contributing the maximum as of now to Nifty. But looking at the broader markets, Agam, it continues to be a day of stock specific day.
Absolutely, Navneet. You know, yesterday was a glitch in the trend that we saw over the previous few days where the advances were more than the declines. Yesterday, we had a little bit of an exception, but we're looking at that trend coming back when we do see more advances in comparison to declines. And speaking of advances, we are looking at gains in something like an IDFC Bank, because that's moving up by as much as nearly 5% in today's day of trade. Of course, there's a lot of speculation around IDFC Bank and the IDFC Group stocks in general. But JSW Energy is the other stock which is doing very well in today's day of trade. In fact, we addressed it in the afternoon show where we're looking at a good amount of delivery as well as long positions building in there. Godrej Industries is the other counter which is doing well in trade today. So Godrej Industries also moving up by as much as nearly 3%. This is after starting the first part of the session in the red, and then ever since it has gained quite substantially. On the losing end, we're looking at some weakness in Alchem. where the stock is down nearly 2%. We have some weakness in Container Corp. Now, I want to pull up Container Corp because it had a very interesting day yesterday. Container Corp, in fact, just began its uptrend yesterday and eventually closed somewhere near its intraday highs. And today we're looking at a little bit of profit taking, still above the mark of 1437. And other than that, some weakness in the likes of Imami and Hutco. But on the whole, given the fact that the market breadth again turns to a positive, that will be something that the bulls will be looking forward towards, Naveen.
All right, that's about the markets, where the broader markets are outperforming in today's session. But on trend spotting today, we put the spotlight on Uflex and what does the second half of the fiscal look like for the company. We asked the Chief Financial Officer, Mr. Rajesh Bhatia. And will Q3 turn out to be a surprise for banks? We discussed that with Mr. G. Chokkalingam of Equinomics Research. And what are the top movers and shakers in the markets today? We cover all of this in the next 30 minutes for you. All right, let's move on to our first trend. We are focusing on the packaging industry today, and among that, one of the market leaders, that's Uflex. If you could just pull up the valuations chart, we'll tell you why basically we're talking about Uflex. We'll definitely ask the management why the stock has been underperforming when it comes to the valuations vis-a-vis its peers like SL Propack as well as Time Technoplast. So there you go. You can see the price to earnings multiple. If you look at the median for this industry, which the Bloomberg terminal is showing, it's 17 times, and these are the multiples I'm talking for FY17. So Uflex is currently trading about 10 times. Look at its peers. SL Propack trades at almost 18 times. Time Technoplast trades at 31 times. Pardon me, SL is trading around 25 times. This is just about price to earnings, but let's also look at price to book. Uflex is under 1 right now. It's only 0.9. Compare that to peers. SL is 4.5 times and Time Technoplast is 3.7 times. Even if you look at price to sales, now this is pretty interesting. That is also below 1.5 times. And for SL Propack, it's 2. For Time, it's 1.7 times. So what are the key reasons? Why are the valuations, is the stock actually undervalued when you compare it to its peers? Let's get in touch with the management of the company. We are joined by Mr. Rajesh Bhatia, who's the Chief Financial Officer at Uflex. Mr. Bhatia, good morning to you, and thanks a lot for joining us today on Bloomberg Quint.
Good morning to you as well.
Sir, I just want to start this conversation. I don't want any sort of commentary on the stock price of the company, but I was just looking at the valuations, and since you're the CFO of the company, I'm sure you'll be comparing the valuations of your company to the peers as well. What is the key reason that the stock price of, Uflex has been trading at a big discount if I compare it to your peers like SL Propack, and even, if you look at stocks like Time Technoplast? Just want to understand, what are the key overhangs? Is the higher debt burden that's overweighing on the company?
I think, no, it's not that, but, the stocks we are comparing with are purely the packaging company stocks. And, these companies are only packaging, while we have a business which is packaging as well as the packaging films. The valuation for the both businesses are different. And obviously, I think, the investors would be looking at value here because, a substantial portion of our business comes from packaging. I would say about 50% is packaging and 50% is packaging films. And that's why the valuations are a bit, I would say that, because it's a combination of the two, and, the investors are not clearly able to see as to the value from the films business as well as the value from the packaging business. That's why it's can't be compared with the peers like SL or Time Technoplast.
Enough, Mr. Bhatia, let's not compare it to your peers, but what would you tell your shareholders? Because if they had to, hold on to this particular stock in their portfolio, where will the key performance now lie for the company? Let's say in the next 2 to 3 financial years, where is that the company is focusing on now?
I think in the next couple of years, our top line will be more from the packaging business. We recently commissioned our Sanand facility. We are in the midst of doing expansion of our holographic facility, which is today doing, almost 100% capacity utilization is there, and somehow we even have to, not accept some of the orders. So the endeavor is to grow packaging more, and when that is seen in the numbers, ultimately the top line EBITDA and the bottom lines, I think then the business will start to get more valuation from the packaging business, and that's our whole endeavor. I think in the next few years, if this 50-50 ratio, we can make it 75-25, that's where, the valuation will definitely, the investors will definitely see a valuation play here, and hopefully we'll do well.
Okay, Mr. Bhatia, so you did speak about, your new facility, that's the Sanam facility. So if you could just give us an idea of what your capacity is currently, what can Sanam do with that? And where, if you could also tell us a little more about the timelines in terms of how you see the additional capacity and hence utilization levels as well over the next year or two.
I think today the plant is capable of doing 7.5 billion packs. And currently, because while there is an infrastructure in place for that kind of numbers, but as of now, we confining ourselves to about 3.75 billion packs a year, and we will require additional investment of about 50 crores to go up to that 7.5 billion packs. But next year, our target is to use about 50% of our capacity. And we have made huge inroads with some of the existing users of the aseptic packaging, and we have started supplies in the current quarter, and it will gain momentum from the first quarter of the next financial year. And for the year as a whole, we targeting about 50% capacity utilization.
As of September, if I can consider your long-term and your short-term debt together, it stands a little over 1,600 crores. And please correct me if I'm wrong. I just wanted to understand that are you comfortable with these debt levels? And since you are going into a little bit of expansion, what can it mean for debt, or will it be will your expansion be through internal accruals?
So I think the debt numbers are pretty comfortable for us at this stage. And given that the EBITDA is about 1,000 crores, a debt level of 1,600, it's a bit more than that. It's slightly about 1,800 or so, the debt number. That's pretty comfortable, and that takes also into account the spend we've already done on our Sanat facility, about little over 500 crore. So while the debt is all added there, the top line and the bottom line is yet to be added. We are not, I think the peak debt for the financial year 18 may be additional of about 150 crores over the FY17 numbers overall basis, which is sort of quite manageable in the context of the earnings that we have.
Mr. Bhatia, what sort of growth are you looking at, when it comes to new segments, and especially the aseptic liquid packaging? Now, that's the space you were looking to target, which so far has been dominated by Swedish major Tetra Pak. Has the capacity been set up there, and are you looking at any sort of additional revenues from this space in the coming quarters?
I think, as I said, that FY18. We've started already dispatching the current financial year in the current quarter, but the real momentum will come from the next financial year. And as I said that we are expecting to sell anywhere say about 2 billion packs next financial year. And that is where we're looking at, the volume growth coming in. The volume growth will also come in our conventional packaging business, where I said that, the holography is the key business for us. And the H1 volumes for us were up 7%. And the values were up by about 6%. We are seeing this trend
continue. The margin that you're looking to garner from this new segment of the business, if you could compare it to your normal flexible business?
So the normal flexible business gives us about 15-16% kind of an EBITDA margin. And aseptic packaging is about 20%, 22%, depending on, the value add for the product is about 20-22% EBITDA margins.
Received orders for this?
We have started some, as I said, that we are in the process of so the aseptic packaging works in a bit different way. All the manufacturers test the shelf life of the product and all that, and that is where only they confirm their orders. And given that for the FY18 they had already done the tie-ups and all that, so FY18 our concentration was more on getting the products approved, showing them that our products can also withstand that life cycle of the product that they are looking at. And we did more than 24 companies we've engaged with. And as I said, that some of the areas where you don't need to establish that kind of a product shelf life, like liquor industry, we've already started supplies there. But some of the other users like juices and the milks and all that will spill over to the next year.
Mr. Bhatia, if you could give us an idea about the contribution that comes from markets abroad and your plans perhaps in terms of expansion, what traction are you getting from there?
Today, if we look at this, our overseas and Indian business mix is about 50 to 50%. The overseas business is all about the packaging films, and we don't have any packaging facility over there. The packaging facility is all built in India. And we have packaging facilities in Noida and in Jammu, and the new aseptic packaging facility is based out of Sanand. So today we're looking at about a 50-50 contribution coming from the domestic and the overseas business.
All right, Mr. Bhatia, thanks a lot for joining us and wishing you all the best for FY19 as well as FY20. But let's move on to our second trend of the day. Well, we really don't know if there is an investment case, first of all, in Uflex, because I was really taken aback when I looked at the valuation, especially price to book and price to sales is below 1. So let's see if this can actually outperform. Then look at the kind of discount this is trading. I look at the PE multiples. The median is 17 times and this one trades at 10 SL, and the other players are somewhere trading between 25 to 35. So let's see how this counter performs, at least in the next 1 year. But let's move on to our second trend of the day, and that's IndusInd Bank, which will kick off the earnings season for the banking space today. Will provisions and asset quality issues continue to weigh heavy on banks? Let's get an analyst view. Joining us right now in the studio is Mr. G. Chokkalingam, founder and managing director at Equinomics Research and Advisory. Mr. Chokkalingam, good morning and thanks a lot for coming by. What sort of expectations do you have first overall from the banking industry this time around for Q3?
Yeah, there would be three set of performance. Banks like IndusInd, HDFC, once again, they would maintain the track record of anywhere from 18 to 30% profit growth respectively. So there won't be any surprise. And the second set of result would be from the PSU bank. I think still there would be a lot of surprises on negative side. The net NPA is yet to peak out for them. So many of them would still surprise the market in terms of high provision for assets, bad assets. And third, the old private sector banks. Already we have seen South Indian Bank results. In that pack, I am expecting good results.
But you've been bullish in South Indian for the longest time.
Yes. Yeah. In fact, we have been successful in the past also. And I believe that the consolidation in the world private sector bank will continue because the industry credit growth itself has crashed to single digit. And if you see the valuation also, some of the banks, recently they have touched a 1 trillion rupee business, banks like South Indian, Karnataka. Right. Now, if you look at other banks like RBL, S Bank, if you compare market cap to business size, a phenomenal difference. Right. Whereas when old private sector banks are trading at 5 to 7% of the market cap, 5 to 7% of the business in terms of market cap to business, these banks are trading at even 25-30%. So I think the gap would be bridged through the consolidation.
Mr. Chokkalingam, could the divergences from the RBI audit be an area of concern for a lot of these banks? Because to a certain extent, not everything is out of the bag yet.
Yeah. Absolutely, you are absolutely right. In fact, some of the credit rating agencies also said that it is likely to peak out only by March. So the December quarter also should have pain, and it will have more pain because we have seen the yield surging, and the credit growth also, though the last fortnight it is in double digit, it was proved that it was mainly because of the low base effect post demonetization. Right. So banks are still having problem, particularly the PSU banks, in terms of bad assets as well as the business growth. In fact, if you have seen the September results, some of the PSU banks had a first time in the history degrowth in the business. Right. So that problem would continue. So therefore, there will be a lot more pain for some set of PSU banks.
Right, and so I also wanted to address the topic of, mark-to-market losses that some of the banks are taking this time. And we've also seen a little bit of an elevation of credit costs. How can this impact some of the most vulnerable banks when it comes to these variables?
Yeah. Again, only the PSU banks would be impacted very badly because they are not in a big way in, the personal loans, consumer loans. So the big banks like HDFC or even S Bank, IndusInd Bank, they can manage because their margins are much better. But the PSU banks would be affected because across the world the inflation rate is surging and oil price has gone up for more than 140% from 2016 bottom, from 13-month low. And even if we take a 52-week low, it has gone up by about 45 to 50%. So definitely the inflation is going to surge further and the interest rate has already bottomed out. So we will not be surprised if RBI in fact raises the interest rate.
Right.
So therefore, this pain will continue at least for another 6 months to 12 months.
You're saying that you will not be surprised if the RBI raises interest rates in this coming year itself?
Before December, it is very much possible.
Okay.
Because it has surprised. The world economy has surprised. If you remember 2016, January, February, we had a deflationary impact. Things were at a 7-year low, 12-year low, 13-year low.
Right.
Now you see the beginning of 2018. It's extremely opposite. You have a record level of metal prices, resource prices, oil prices, even the food crop prices as per UN agriculture division, they have risen very fast. So, and even if you see the crop, like a Rabi crop, it is marginally down. Right. Even the Kharif crop is not doing well, the area under cultivation. So all around we are having the problem of rising inflation and rising interest rate. Also not forget the fact that there is going to be at least 2 rate hikes by the US Fed.
Yes.
In this year. So all this would point towards rising inflation and rising interest rate.
They've given guidance of 3 hikes.
Yeah, but they are saying that minimum 2 would happen.
Yes, minimum 2 will happen,
One of the
but
regional
they
Fed
said
says,
likely 3 can happen. But Mr. Chokkalingam, when we talk about the banking sector, we have to speak about the credit growth. And, credit growth has not picked up in the last few years. Definitely for Q3, we have a favorable base because of demonetization last year. But what sort of an average credit growth that you see from the sector in Q3?
Again, very, very interesting question because industry is growing only at 8-9%.
Exactly.
The double digit is because of base effect. But, the first time in the last 20 years, I have seen the PSU banks degrowing the credit. 2/3 of the government-owned banks, they have got a negative degrowth in September. So I don't think it is going to change in December. So therefore, when you have the pain and if your business is also not growing, you can't come out of the pain. Right. So you have to be very, very selective in PSU. But fortunately, some of the old private sector banks like South Indian Bank, Karnataka Bank, they are still growing credit in double digit for the last 2-3 quarters.
Right.
So similarly, you have HDFC Bank, so they are also posting decent credit growth. So one has to pick up based on 3 parameters. The credit growth has to be in the double digit and net NPA has to be at the bottom of the ladder and third price to book value. So if you follow these 3, the message is very clear. So these are some of the names which I have mentioned are worth buying even at the current prices.
Do you see any immediate impact in the credit growth after that news of bank recapitalization? Once that capital is allocated to these banks, I think 80,000 crore has been, which was recently approved in the parliament. How much time will it take for the credit growth? I'm only talking about the PSU banks here once this capital is allocated to them.
Yeah, see, roughly as a thumb rule, 80,000 can support 10 times multiple of the credit, in terms of capital adequacy ratio. So this 80,000 crore can support 8 trillion rupees of incremental credit. But the point, so that's about almost 10% of the overall credit base in the system. But the point is, whether this money is going to, immediately trigger the lending because they already have a carryover pain.
Exactly.
So for some of the banks, the credit, instead of being negative now, for many PSU, it can become positive at 3 to 5%. So one has to pick up those banks which quickly come back to the positive growth territory in terms of credit. So then you can make money in the stock.
So that leads me to my next question. We've been speaking to a lot of people and a lot of people are saying that if it is in the PSU sector, we would choose a very large bank, something like an SBI. But other than that, we're not sure if we want to look at anything smaller than that. What is your view on the PSU banking space now? And are there any opportunities beyond just the larger banks?
Oh, certainly, I know something like a Bank of Baroda, Vijaya Bank. One can definitely look at them. So because it is very easy to pick up the stock in PSU space.
Right.
Don't look at the profits because that can be adjusted as you want to report because you have to the provision figures.
Sure.
So look at the adjusted book value.
Right.
And again, the previous governor gave us some cushion in terms of revaluing the reserves and taking into consideration.
Right.
So you go back to the balance sheet, remove the revaluation reserves. So without revaluation reserves, adjusted book value, price to adjusted book value, if it is anything less than 3 to 4 times, and the credit is not degrowing in a big way, and certainly, you can make a lot of money. And some of these names like Bank of Baroda, Vijaya Bank, they fit into this. And there are other extreme banks like IOB and other couple of banks.
Right.
The net outstanding NPA is more than the net worth.
Right.
So unless the government does some miracle, it is very difficult for the shareholders to make money in those stocks.
Right. So, since you've spoken about IOB, what do you make of its latest development with respect to what is done, in terms of some changes with respect to write-offs?
I think there is no choice for them because lending has gone wrong.
Right.
But my firm view is that if your net worth is less than the outstanding net NPA, then what is left for the shareholder? It is something like Bush and Steel or some of the infra companies where asset value is less than the lending.
Right.
So similar situation is happening to some couple of banks. So if one can make money if government merges such banks based on the market price rather than on the basis of the fundamentals. Otherwise, it is very risky to invest.
Mr. Chokkalingam, for an economy to grow, if somebody wants to take a bet on Indian economy now, for sure banking plays a very, very important role in that. If I were to ask you if there is 1 or 2 stock that one should hold from this space in their portfolio, be it from banking or PSU, which one would that be?
I have a bias for Karnataka Bank, South Indian Bank. Personally, also invested. All our clients have invested and continue to invest even today at current prices. As I mentioned, they are trading at 5 to 6% of the business, the market cap to business. Right. So already we have seen 5 banks being taken over at a fancy valuation in the last 25 years. So I am of the view that the consolidation would continue, the valuation multiple would increase. The second stock could be within the automobile space. It could be Maruti for a conservative investors, or little risk-taking investors, or it could be even MRF. Because even this morning we saw the credit trading agency's forecast on the tire volume growth, which is around 8%, is a phenomenal.
Right.
So these are the 2 stocks I would suggest.
All right, Mr. Chokkalingam, thanks for joining us and giving us an update on the banking sector. Of course, plenty of earnings out there to watch out for.
On that topic of earnings, can we just pull up the chart of Shree Cement? I guess that's also going to come out with its earnings today, and we've seen a sudden spike in that stock. There you go. It's just come off day's high, but the hike has just come in the last 5 to 10 minutes of trade. So watch out for this counter as it declares its earnings today. But what are the other stocks that are moving the markets today? Yash Bhatia joins us with those details. Yash, over to you.
Thanks for that, Navneet. So we start off with Som Distillery, and it has to be our stock of today. It has hit a fresh 52-week high of 264 today after EQ India Fund, which is led by Poranjo Velia, bought close to 6.5 lakh shares in the company, amounting to 2.3% of the overall equity via bulk deal yesterday. Fresh 52 weeks high for GE Power as well. The stock had hit a 52-week high of 916 rupees on the NSE today after the company bagged an order worth close to 820 crores from Navyug Engineering for the supply of 20 numbers of 80 megawatts turbine generators along with their accessories. Jagatjeet Industries is locked in a 5% upper circuit as well after there was an ET report stating that the company has finalized a 265 crore debt refinancing deal with India Bulls Commercial as part of its strategy to repay its old debt and correct its faltering growth. India Nippon has gained more than 9% in today's day of trade after the company said that it would be considering the proposal of a stock split at its board meeting on January 29th. Himadri Specialty Chemicals is another stock that we are looking at, and it had gained close to 6.5% today after Axis Securities came out with a note initiating coverage on it. Now they have assigned a buy rating and have set a target price of 238 rupees, which translates into a potential upside of as much as 28% from its previous day's close. Now they believe that the carbon black product segment is the key earnings driver going forward, and they expect their revenues and net profit to grow at a compounded annual growth rate of 23% and 58% over FY17 to FY20. And finally, we're looking at Jai Corp. The stock was up almost 10% today after Business Standard reported that Mukesh Ambani, the chairman of Reliance Industry, through his personal investment fund, is in talks to buy the company's 24% stake in Navi Mumbai Special Economic Zone. Back to you.
Thanks for that, Yash. Of course, plenty of stocks to watch out for. not only because of earnings, but also because of a lot of news that we are looking at. But with that, it's a wrap on this edition of Trend Spotting. A lot more lined up. Don't go anywhere. Hot money is up next. Stay tuned to the Bloomberg Quint Live.